Once you understand how to correctly align your timeframes, this is where your trading becomes very simple because you need 3 or more timeframes which align together, pointing to the same direction you want the market to go. And this is where your high probability trades are going to stem from. So in this video, I'm going to show you exactly how to align your timeframes if you're a swing trader, day trader, and even a scalper. So without further ado, let's get into the teaching of this video. Okay, so the first thing you need to understand for time frame alignment is you need 3 or more time frames. Preferably you want 3 that align together, pointing towards your bias. So say for example you are bullish on the day, but 2 time frames are telling you that the market is bearish and one of them is telling you bullish. This is where you're going to have a low probability trade. You want 3 timeframes which align together, pointing to the same direction you want the market to go. So now you understand how high probability trades are formed and where the framework comes from. You need 3 timeframes pointing to the same direction you want the market to go. So now let's go over how to exactly align your time frame. So the first type of trade that we're going to go over is a swing trader. So you're going to focus on the weekly time frame, and this is where you're going to find your dealing range, and this is where you're going to find your draw on liquidity. Once you find your draw on liquidity or you find your dealing range, you're going to move on to the 4-hour chart, and this is where you're going to refine everything. And once you've refined everything on the 4-hour chart, you're going to move on to the 15-minute chart, and this is where you're going to enter from. And this is exactly how to align your time frames as a swing trader. Now let's go over a day trader. So if you're a day trader, you're going to focus on the daily time frame, and this is where your draw on liquidity and your dealing range is going to stem from. After you understand what your draw on liquidity is on the daily time frame, you're going to move on to the hourly chart, and this is where you're going to refine everything so the market's pointing to the direction you want it to go. And once the daily and the 1 hour align together, you're going to move on to the 5-minute chart, and this is where you're going to enter from. And now this is exactly how you will be aligning your time frames as a scalper. So again, you're going to focus on the 15-minute chart, and this is where you're going to find your draw on liquidity and your dealing range. And then you're going to move on to the 5-minute chart. And on the 5-minute chart, this is where you're going to refine everything. Once you refined everything, you're going to move on to the 1-minute chart, and this is where you're going to enter from. And this is exactly how to align your time frame as a scalper. With this understanding, we're going to move on to the charts, and I'm going to show you how to exactly align your time frames, where you will find your dealing range and your draw on liquidity, then how you will refine everything, and then how you will enter. And we're going to focus on a swing trader, day trader, and a scalper. So let's get into that right now. So now we're going to go over how to align your time frames on the charts, and the first type of trader we're going to go over is a swing trader. So obviously you will be focusing on the weekly time frame, and you can see on the weekly time frame, every time the market trades into down close candles, they are supporting the market higher. So if you watch my video on order flow, what does this mean? This means that the market has bullish order flow. So if we look right here, we trade into these red down close candles right here. Once we trade into these red down close candles, look how the market reacts. We reject away from these levels. So we know that the market has bullish order flow already, and this gives us a bullish bias. And you can see we take out this low, and then we close within this candle's range. So we want to see price trade higher and take out this candle's high, and this is the weekly candle, and this has buy side liquidity above it, which we want to target. So when the new weekly candle starts printing, this is where we're going to target, and we're going to move on to the 4-hour chart, and we're going to refine everything. So you can see the weekly time frame was bullish. We moved on to the 4-hour chart, and we have a gap right here. We want to see the market trade into this gap and then trade higher. But what does this look like right now? This looks like a market maker buy model. We have our original consolidation right here, and we have our reversal right here. So if you've not watched my video on MMXM, I would recommend you do so, and there'll be a link to that in the description down below. So with that being said, on the weekly time frame, we are bullish. We moved on to the 4-hour chart to refine everything. The draw is still clear. We are bullish. We want to see the market trade lower, fill in this gap, and then we will trade higher. So once the market trades into this gap, this is where we're going to move on to the 15-minute chart, and this is where we're going to look for entries. So on the 15-minute chart, you can see that we traded below this low, and then we had a reversal. Also, what did we have? We had 1, 2, 3. These are 3 red down close candles that we closed above, so we had a change in the state of delivery. So we want to see the market trade lower, trade into this fair value gap where we will buy from with a stop loss just below this low, targeting the buy side liquidity on the weekly time frame. So as you can see, we get tagged in, and then price trades into our level of liquidity that we were looking to target. So as you are a swing trader, you can hold these positions for weeks and even months on end, and this is exactly how you should be aligning your time frames going forward. So now we're going to go over how to align your time frames as a day trader, and you can see that the market trades into a red down close candle right here. Once we trade into this red down close candle, we reject away. So as we trade into this red down close candle and we trade away, where is the next area that we can target? This is this candle's high right here, and we have a tiny fair value gap that we can look for the market to get into. So as we have a bullish bias, we're going to move on to the hourly time frame, and this is where we're going to refine everything. So if you look right here on the hourly time frame, you can see this is where the candle traded into the down close candle, and then we rejected away. And you can see we traded below these lows and swept the liquidity. Where is the next area that we are looking for the market to get into? This is the buy side liquidity above this high that we spoke about on the daily time frame. So once we see this on the hourly time frame where we have a bullish bias, we're going to move on to the M5 and look for an entry. So as you can see on the 5-minute chart, we have 1, 2, and 3 down close candles. We're ignoring this green candle right here and pretend these 3 red are consecutive down close candles. Once we close above these 3 red down close candles, we have a change in the state of delivery, and we can trust buying opportunities inside of this fair value gap, and we can trust our stop loss below this low, and that's because we anticipate that low to be a protected low, and we can aim for a 1 to 2 trading setup, or you can aim for the buy side liquidity that we spoke about. So as you can see, price tags us in and trades into the red down close candles, which change the state of delivery, and then we trade away into the buy side liquidity. And this is exactly how you should be aligning your time frames as a day trader. So now I'm going to show you how to exactly align your time frames as a scalper. The main time frame you're going to focus on is the 15-minute chart, and you can see we have buy side liquidity above this high, and we have sell side liquidity below this low. So why am I choosing this low and not this low? Well, this was the most recent low that was made before price made the move higher, and we stayed within this consolidation. So all we are going to look for is the market to trade into one side of this range. So if we trade into the range low, this is where we take out the sell side liquidity, and we're looking for the market to trade higher and trade into the buy side liquidity, and then we're going to move on to the 5-minute chart. So as you can see that the market trades higher, trades into the buy side liquidity, and then we trade away. So we're on the 15-minute chart right now. We're going to move on to the M5, refine what we see, then we're going to move on to the M1, and then we will enter. So looking at the 5-minute chart, you can see we have 1, 2, 3. These are our up close candles, and the market trades lower and closes below them. So this is where we have a change in the state of delivery, and we know that the market wants to trade lower and trade into the sell side liquidity. So as we refine that our bias is still bearish on the 5-minute chart, we're going to move on to the M1, and this is where we're going to look for an entry. So on the 1-minute chart, you can see this is where we changed our state of delivery, and this is where we're going to sell from, with a stop loss just above this high, anticipating the market to trade higher and trade into this fair value gap right here. And as you can see, price trades higher, trades into the fair value gap, and then we trade into the sell side liquidity. So if you made it this far into the video, I want you to go into the comments down below and put what you have learnt about aligning 3 time frames together. You can see every time we aligned 3 time frames together and they pointed to the same direction, this is where we found a market maker model, and it was a very high probability market maker model as well. So with that being said, this is exactly how you should be aligning your time frames, either if you're a swing trader, day trader, and even a scalper. And with that being said, if you want to watch me trade live where I share my exact entries and exits and I live stream every single day, there will be a link to that in the description down below. But with that being said, keep in mind I'm rooting for you and I hope you find success in this business. As always, enjoy the rest of your day.